It's my pleasure to be here. My name is Glenn Tompkins, Senior Instructor here at VectorVest. My pleasure to be here. Glad to see so many people that are here. We've got a lot of new people. We've got a lot of regular people. This is really turning into something really, really good. So I'm loving this, and I'm glad that you are as well. It tells me that the content that you see here is things or are things that you want to see. Want to let you know, not only are we now doing a YouTube live stream like you know we do, guess what? We now have a podcast going on. So this will now be podcasted where we will be on Apple, Google, Spotify. That's going to be huge. All right. So now Joey's going to show the screen. We now have a podcast. We have a podcast going on. Thank you, Stan. I appreciate that. And again, with the stocks that you're talking about, hold off on them. I will give you an opportunity to look at individual stocks. I have to make sure I use the right pen, because if not, Joey is going to be very mad at me. All right, so stocks that you want me to look at, we will look at. I'll give you an opportunity to be here, but I'm loving the idea that we do have a podcast going on now, folks. So you guys are making this, grow this into something huge, and I'm loving it. So again, thank you for being here. And again, another applause for you guys supporting the YouTube. If you're brand new and you haven't already, please subscribe to the channel. Look right below the video. You can subscribe to the channel. Hit the subscribe button, hit the bell icon, like us. Everything that you can do to help us, by all means, continue to grow this. We've grown this enough now that we've got a podcast going on. So, man, I'm loving this. I am loving this. Now, I saw a comment in here before Joey takes this away. I saw a comment in here that said that someone sold their NVIDIA trade, $1,300 profit, especially because of the warning that I gave last night in the Daily Color Guard report. I want you to understand this. Part of what my presentation was last night in the Daily Color Guard report was not to panic sell. The market is still moving up, but the market is overbought right now. That's all that I wanted to get across. So if you take the profits, you tighten your zoom, I see Zoom popping up in there. If you tighten your stops, then you're rocking and rolling. You're gonna be okay. All right. Today I'm gonna spend a little bit extra time on market timing. We always start off with what's going on in the market and why the market is doing what it's doing. So my first stories always pop off with what's going on. There's three things that move markets globally. Three things that move markets globally: earnings, interest, and inflation. When earnings are going up, we're in a bull market. Earnings go up, stocks prices go up. Earnings, inflation. Inflation, when inflation is up, it costs money to buy things, to buy goods. And if you take more money to buy goods, that's taking more money out of your pocket that you can't use towards investing in your company. And the same thing with high interest rates. Well, keep in mind, interest rates are still historically low. Inflation is where the Fed feels that it's okay. Earnings is still, for the most part, rising. And even though with the COVID-19, the pandemic we had, earnings are going to get effectively hit. I don't think we're going to really truly see the effects of how earnings affected companies until third quarter. All right, that's what I'm thinking. Third quarter is going to be a very interesting quarter for earnings, because coronavirus hit in the first quarter. I'm thinking that by the time third quarter comes around, we will truly see how companies were affected in the way of earnings. But getting back to what's going on right now, the market is overbought. We're going to get into that right now. Let's go open up the home page of the VectorVest software. And you know what else is interesting as I start to get into this program? I'm curious to know, and I know at least one person, how many people who are here on the YouTube channel finally decided to take out a trial to the VectorVest software. Joey's going to see that. I'm not watching the chat right now. Joey's going to take a look at that. I'm very curious to know how many people from VV Nation here on the YouTube channel converted over to at least a trial to the VectorVest software. And as we go along, Joey will let me know how many people are doing so. And for that, I want to say thank you for at least taking a trial. 99 cents for 30 days is not a bad deal, folks. Wow. I didn't realize. Joey just showed me the chat. I really didn't realize how many people. Holy smokes. Thank you guys so much for that. That makes me know Yes, started a trial after the summit. Way to go, Salim. That makes me really happy to know that these presentations that we do on Trending Thursdays are not for naught, that people are actually using the data that we're showing in the live stream, and you guys are at least taking a trial. Outstanding. Thank you so much for supporting us in that regard as well. All right. From a market timing perspective, we're now looking at the homepage of the VectorVest software. A lot of information can be gleaned right from this homepage. Now, as we look at the homepage, we can clearly see that today the market's down. Not a ton, but the market is currently down. The Dow is down less than 1%. Everything is off the levels of being positive, not by a ton. The biggest mover to the downside looks to be the NASDAQ, down about 0.3%. The S&P 500 down about 0.3%. The 100 down about 0.3%. And the VectorVest Composite down about 0.2%. The only thing that's anywhere near positive is the Dow, where it's down less than even 0.1%. So now, is this the onset of the market moving to the downside? I don't know. But as a VectorVest subscriber, you now know that the market was grossly overbought, and the information that I gave in the Color Guard report last night was all about telling you to be careful. That's all I want you to do. And if you've got profits on stocks, don't be afraid to take them off. Why? Because you can't go broke taking a profit. If you have losses in some stocks, tighten the stop on the loss side. Make sure instead of taking a full 10% loss, maybe tighten it down to a 7% loss, because the rebound to the downside is coming because the market is overbought. So as we look at the quick list, we have a little bit of a down day today. We look at our market timing gauge, which is our daily traffic light into the market. We moved from 3 ticks into the green yesterday to now 2 ticks into the green. VectorVest still advocates buying safe undervalued stocks that are rising in price. But here's our color guard. Our color guard tracks 3 of our market timing indicators: price, which is the price movement of our VectorVest Composite. The VectorVest Composite is an indexed arithmetic average of all of the stocks that we track, and currently we track 8,188 stocks. The price right now of $46.88 is the index average price of the move of 8,100 stocks. That's why we use it for market timing, because of the sheer number of stocks it tracks. RT, which looks at the short-term price trend of the market, currently is at 1.36. Above 1, the market's in an uptrend. The higher above 1 it is, the faster in an uptrend we are. The buy to sell ratio, which looks at the overall health of the market, today is at 8.86. That tells me that for almost every 1 sell recommendation, we have about almost 9 stocks in the system that are buys. The market is on fire, folks. It is. And then we have an indicator, the MTI, which looks at all 3 of these indicators into one indicator. That MTI is cast on a scale between 0 and 2, and it looks at the underlying trend of the market. When the MTI is above 1, the underlying trend of the market is in an uptrend, and when it's below 1, the underlying trend of the market's in a downtrend. But the MTI also gives us levels of when the market is looking for a top or for a bottom. The MTI, once it gets to a level of about 1.5 to 1.6, the market is looking for a top. Currently, we're at 1.78. The market is definitely way above the level where the market is looking for a top. The rubber band, if you think about it, the rubber band is past the 1.5, 1.6, now trading up to almost 1.8. What happens when you let the rubber band go? It comes back down. And the further it is away from your finger, the faster it's going to snap back. That is the situation that we're in right now. Last night, I talked about several things that are making the market go higher. We'll talk about that in a second. All right, so still more green lights than yellow lights. It's okay to buy stocks. Today, we have a yellow light in the color guard pricing column. Today is probably not the day to buy stocks, but the market is still moving up. All right, that's just on the homepage. Let's go to our first story. Let's talk about what's making the market move. All right, we'll go to the first story. The Fed. First story tells me that say again? Oh, what? Oh, click it. Joey's, there he goes. Here's the first story. The Fed The Fed expands municipal lending facility to more localities. The Fed, as I've mentioned on more than one occasion, has the spigots wide open to make sure that we have a strong economy. That's the Fed's job. The Fed's job is to look at interest rates and look at the job number. Just to let you know, today the job number showed that less than 2 million people signed up for new unemployment benefits. The number is slowly but surely going down on a week-over-week basis, but we still have a lot of people out of work. But as the market in the country is starting to reopen, a lot of people are starting to try to hire new people as well. So keeping in mind where the unemployment is and what people are doing, that could be a positive spin on the market. Next thing, coronavirus stimulus funds are largely depleted already. That's how hard the pandemic hit us. Corona stimulus funds are largely depleted. Direct federal assistance spent or committed amounts to 1.12 trillion. Do you not know that the big number for the stimulus was about $3 trillion? Both Congress and the Federal Reserve are pumping trillions of dollars into the economy to fight the economic damage caused by coronavirus. The Wall Street Journal explains where all that stimulus money is coming from, and here's the story on that. 9 weeks after Congress approved its largest ever economic relief measure to counter the coronavirus pandemic, most of the direct cash assistance aimed at keeping the economy afloat has been spent or committed. Folks, this is one of the reasons why the market continues to be on fire right now, but a lot of that money is already being spent. And the last but not least, the last story in here is U.S. economy faces a long recovery from coronavirus effects. Surveys of purchasing managers in the U.S., Asia, and Europe purchasing. They got to buy things, right? That's why the PMI, Purchasing Managers Index, is so important. For that reason, that's not what the PMI is. Nope. But the Purchasing Managers reports across the globe offer some hope that the decline in factory activity is starting to bottom out. Well, we see that the market already started bottoming out back in late March, and now other facets of what's going on in the economy are getting to that point of bottoming out as well. All of this adds to the euphoria of the market reopening and the idea that things are going to come back to normal or we're going through a recovery. All of these things put together are pushing the market higher. The market is on fire. It's on higher because it's on fire. And you know what happens? That's what happens. Woo-wee. That's not the woo-wee, that's the other woo. But the market is just like that right now. The market is rocking and rolling. But with all of the rock and rollinosity, that's a new Glenism. Joey, write that down. With all of the rock and rollinosity, the market is moving at a clip where it's becoming overbought. So don't get caught out there with the pretty lights of the market. Understand what's really going on. And this is the guidance that you'll only get here that tells you, be careful right now. Don't back the truck up. Don't bet the farm. This is a time to still be cautious. Take advantage of the market as it's moving up. Don't forget, it's okay to take those profits off the table. All right, so those are stories talking about what the Fed is doing, what the government is doing to buoy the economy and to make sure we're rock and rolling. Let's go to my watch list. I'm going to pull up my watch list in a second. All right, my watch list for today happens to be under the watch list viewer. Let's go to Trending Thursday 6-4. Here are my stocks that I'm going to be looking at today. I think we have 13 stocks, 14 stocks in here. But for the market, for those of you who are not subscribers to the VectorVest software, we're going to look at the spiders. And for those of you who are subscribers to the VectorVest software, we're going to look at the indicator that we track the market, which is the VVC, or the VectorVest composite. Now that I have them highlighted, I'm going to right click. I'm going to view the stock graph. Let's move this over. This is the market, folks. Here's the S&P 500. I'm loving that it's moving up. And this is a generic graph. It's got a 20-day exponential moving average. I've got support and resistance on the graph, and I've got relative timing, or the short-term price trend of the market. I'm going to zoom into about a 3-month time period. This is it. The market's above the 40-day moving average, broken above two levels of resistance. Now, yesterday, the S&P hit a new 3-month high, a little bit of a pullback today, but clearly above the 20-day exponential moving average. RT is telling me that the S&P 500 definitely is in an uptrend, but notice how it's starting to level out. Let's go bring up the VVC. Same kind of scenario with the VVC. Here's the earnings per share on the VVC. I'm going to take that off for a second, but all I really want to pay attention to, the market's moving up above that 20-day exponential moving average, breaking through two levels of resistance, a little bit of a dragonfly doji today on today's activity. Notice that the open and close price are very close to each other. So the market is showing levels of indecision today, but that makes sense as the market is getting toppy. I'm going to add the MTI to this graph. Let's go add, I can't add it because I'm not looking at a market timing graph. I'm going to add new real quick. Let's now look at a market timing graph. The difference between the two graphs. Before I was looking at the individual ticker symbol of the VVC. Now I'm looking at the VectorVest market timing graph, which still looks at the VVC, but now I can add market timing indicators like the MTI. The MTI, as I mentioned last night, is at the highest level it has ever been in the history of VectorVest. And normally when the MTI hits a level of about 1.5 to 1.6, the market is looking for a top. The market tends to pull back. But at this such a high level, the market is poised for a big pullback. Now, could that pullback last a day or 2 days, a month, a year? Don't know. But I'm telling you, from a heads up perspective, I don't want any of you out there to be blindsided when it happens. That's the most important thing. Don't get blindsided, because when it happens, it's going to happen fast and furious, just like the Tokyo Drift. It's going to happen fast and furious. Don't get caught out there, all right? So that's what our market looks like, both by the way of the spiders and the VVC, as well as my first level of stories. Thank you for taking the time to watch this video. Now, if you're new to the software or would like refresher information about the software, click on this Getting Started video right here. Thanks to all of your input, here's a YouTube video that we think would be perfect for you. Click right here. If nothing else, folks, just hit the subscribe button right here.